guys have that? 30-something%.
This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. This after some better news out of the Eurozone. We are rebounding after yesterday's worst decline in the S&P 500 futures since last November. Still thinking that longer term, this market is on a collision course with the trend toward higher long-term interest rates. One thing that we'll have to keep a close watch on is how futures respond to news. So far, we have seen the news generally helping stock index futures. So in the short term, I think we can trade sideways, but longer term, we have to be very wary about these long-term rates increasing. Over in the currency markets, seeing the euro currency holding up relatively well, even though we do have some increased political turmoil in Italy and Spain. We did have some better economic numbers out of the Eurozone. That's supportive to the euro. Don't forget, we do have the European Central Bank holding their policy meeting this Thursday. Most likely they will maintain current policies. Also, we'll have the Bank of England holding their policy meeting Thursday as well, and they as well are likely to keep interest rate policies unchanged. Some better news out of the UK, not helping the pound. That has to be viewed as a sign of weakness for the British pound. We are lower today. I think we can see this market continuing to weaken. Also, the yen at another 2.5-year low against the US dollar. It does appear that the Bank of Japan is interested in pushing the yen lower, as they say, for purposes of fighting deflation, although they have been accused of attempting to push the yen lower for trade purposes. Our feeling is that whatever the reason is for this unofficial policy from the Bank of Japan, we would expect the yen to continue to come under downside pressure. Credit markets lower in response to better European news, also lower due to higher stock index futures. Still feel that this market has topped out, the bull market is over, and this was a multi-year bull market for the credit futures market. Any rallies are likely to be only flight to quality rallies, and I think those should be used as selling opportunities. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.